look at the financial crisis, you had a shadow banking system.
Right.
It's PIMCO, not Citibank, I think, coined that one. And the shadow banking system was all about lending in these complicated structures where finance folks were lending to finance folks.
Yeah.
And you were incentivized to write a loan and then sell it off to somebody else before it could go bad, right? That's scary. And I think that it's really important for regulators and for particularly lending businesses to have incentive structures that are aligning incentives between the borrower and the business.
Definitely see, a need for regulation. I think certainly when we are investing in a startup, we absolutely want to make sure that there is a deep understanding of a regulatory process. We are obviously operating in a heavily regulated, somewhat conservative industry, and it's important. We've seen examples out of Silicon Valley that haven't taken that approach, and they've taken the
to put it
move
mildly,
fast and break shit, and it's not worked.
Can we trust guys like you, Hart?
Well, I was going to then add, there's a lot of other businesses where the existing incentive structure, I think, is very broken. So wealth management, financial advice.
Or Wells Fargo, right? I mean, wasn't that the problem? Is anyone here from Wells Fargo? Do they still exist? I don't know.
So you look at that, those are huge opportunities where you can take a broker-dealer market, a commission market, where people are trying to just earn commissions selling you products you don't need, and actually look at creating an incentive structure where the interests of the financial product producer as well as the end customer are better aligned. And I think those are huge opportunities.
There is a certain arrogance to Silicon Valley imagining that it can reinvent every sector and that it should be. And yet, on the flip side, I can see real validity to innovate, and then, the governments need to catch up and understand that. But from a consumer point of view, I think there definitely is a position of distrust of traditional banking institutions. And so to me, the opportunity is in more transparent banking and transparency and ethical banking where you're completely open. There's still, everything
That's
about
a phrase, ethical banking. It's not a contradiction in terms.
But even in the excitement around the blockchain and Bitcoin, a lot of that is driven by distrust in government. There's all that theory around how the government, by regulating currency, is actually secretly manipulating it to skim off money, and that's really antiquated, or if not evil. So I think there's a disconnect between our faith in institutions now.
How can we trust you, Vishal? You're lending to people who struggle to borrow from traditional lenders, right?
Sure.
What about the fear that companies like yours will create a new bubble? The reason why banks maybe don't lend to them is because these people's finances are dodgy and they can't pay you back.
Gareth actually kind of scratched the surface on this before. We use data to lend at rates that make sense using that data. So instead of just kind of blanketing and just kind of offering a one-size-fits-all loan for a subset of the population, we look at their data. We really try to make sure that we're catering our services to them. And things like payments are done in a way that we know, this is probably generally the right time, the right schedule for you to pay this thing back, instead of having them kind of tell us when.